afternoon. This is Oliver Sloup, Blue Line Futures. Today is Wednesday, April 26th, and we've got a new segment. I guess we're bringing back an old segment that we used to do pre-COVID called the 2-minute drill. That's back when we were doing the TV hits from the floor of the exchange. It is basically what the title says, 2 minutes or less. We're going to touch on a few things that caught our eyes in today's trade. Before we get into today's markets, I do want to remind you, if you haven't subscribed to our YouTube channel, give us a follow and a thumbs up. We really appreciate the support. Without further ado, we can get this shot clock started. And the markets we're going to touch on today, corn and hogs. We've got July corn pulled up here. This is something that we've been hammering on really for the last week, is talking about 595 to 601 being a very significant support pocket for the market. And from a trader's perspective, the risk reward looks favorable to the buy side on the first test. Now, yesterday was the first test. We got a nice rebound into the afternoon session off that 601 level, and it looked like we were going to get some follow-through early this morning. That did not happen. Once we got that 8:30 open, we saw the selling pressure pick back up, took us right back towards yesterday's lows, which also represents, again, that 595 to 601 gap from July 26th, trendline support, and these March lows. Break and close below here would neutralize our bias, but again, from a risk-reward perspective, you want to see this market hold here, and if we can do that, potentially we retrace some of last week's losses. Potential upside targets, if you're looking at the long side here, would be the 50% retracement from this recent move and the 50-day moving average. That comes in near 625 to 628. Now, moving over to the lean hog market, we had a big update in lean hogs today, trading over $3 higher, something we haven't been able to say in a very long time. We broke out above the upper end of this channel in today's trade, which I think started to really trigger some short covering from the funds, and this is something we've talked about recently as well. This is the most recent commitment to traders report. Funds net short about 24,000 contracts. Doesn't sound like a lot on paper, but this is a 5-year chart. It's their biggest net short position in over 5 years. So you got a little bit of a short covering here. We're just a stone's throw away from unchanged on the month. With today's close, I wouldn't be surprised to see additional short covering, potentially get us back into positive territory. Looking at the 50-day moving average as a potential upside target if we can get some follow through, and that comes in near 94.70. So that's the 2 minutes. Those are the two markets we're looking at. Any questions at all, feel free to give us a shout. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.